Hello, everyone, and welcome to Full Circle's live event. I'm pleased to introduce the speaker today, Carlos Vicens, CEO. Today, he will be providing commentary, on this morning's news regarding a 9-month commercial term sheet with industrial CO2. Following the update, there will be an opportunity to ask Carlos any questions that you may have, so please feel free to submit them in the bottom right corner there in that little text box. As always, the summit is being recorded, so you can watch it afterwards. But I'll pass things over to you, Carlos, to share the news.
Thank you very much. So we're very excited to provide you with an update on our operations on the midstream feedstock recycling business. So as of today, we have signed a second term sheet with an important client. And recall that our first client was signed last year, around this time last year, plus or minus. And that client is supposed to bring us around anywhere between 400 and 500 tons. And we're very close to now signing a binding terms of commercial operation there. And we'll announce that as soon as we have additional updates. But with this specific client, one of the important parts about this client is that not only it's our second, so it provides a little bit more diversification on our business line, but it also provides us with a potential to produce lithium carbonate at our plant in Georgia. So the way that we've signed this agreement, we believe we have a much better, I would say, economic return for the business, where we would treat what some may call a byproduct of the operations of this client into a lithium chloride solution, which they will then be shipped to our plant in Georgia, and then we will process that into a lithium carbonate through our operating and fully permitted plant. And then from there, we would sell that lithium carbonate to the market. So we already have significant, I would say, interest in buying this product from major, I would say, third-party marketeers. So we don't see any issue in terms of selling that product when we have that product available. We believe that as we go through the initial testing and work with this specific client, we would be in a position to start operations and installing a plant at their site, I would say, by end of this year, fourth quarter of this year, calendar year, which is not necessarily too far away. We're already in April, so we're looking at around 4 or 5 months from now that we would be installing and operating this plant. So we're very excited. This client will provide us with around 300 tons of potential lithium carbonate production at our plant. And if we would combine the first client with this client, we were in and around the 700 to 800 tons per annum production on a lithium carbonate equivalent basis. So again, very, very excited to announce this. We are still working on other clients. In fact, we're working on a third and fourth client. So we expect to potentially announce those as things develop there. But, we're very happy to have our second one.
Thank you, Carlos. Appreciate the update. I'm just writing a couple things down here. So if and when both of these clients are fully on board, 700 to 800 tons per annum, what's the capacity? Is there more than enough capacity at your site?
Yes. Recall that we have a lithium carbonate production plant that has about 2,000 tons of capacity per annum. So we would not be utilizing not even half of that. And our first client, we would not be producing lithium carbonate. We would be producing lithium chloride, very clean lithium chloride, and selling it back to them. So the capacity would at our plant today would be 300 tons if this client would be producing, plus whatever we would be doing on our battery recycling side or any lithium refinery business that we would have at that time. So significant capacity at our plant to continue the processing of lithium carbonate. So not a problem with that. Now, we are working on other clients that would take significant amount of that production. As we evolve and as we announce these deals, that capacity will start to, be shortened in terms of, and that's a good thing. So when we when we fill that plant with production, that is exactly what we want. We don't want to overbuild too soon. Capital is important for us to make sure that we have that before we invest anything new on our plant. But we still have significant capacity for growth.
And as I wait for questions to trickle in here, maybe it's worth elaborating further on who industrial CO2 is. Is 300 tons a lot for them? Like, what's the scale and potential here?
Well, they have different sites that they operate in the Midwestern part of the U.S. They're a U.S. company. And I think that their total capacity could be in and around the 500 ton. However, their main plant, which is the one we're building our plant in, our processing plant, is around the 300, and the other 5 or 6 smaller ones would have the rest of the 200. So what we're trying to do is first focus on the main plant and make that work. And then as we see that working and evolving, we may pull more feedstock from the other plants if the economics are still there. Remember that we're in a point of the lithium carbonate industry pricing environment that is somewhat low when compared to where it's been over the last 2-3 years. So even though the price has stabilized and gone up over the last, I would say, month or two, we're now in around the $14,000 to $15,000 price, depending. And now we're talking about spot pricing, not contract pricing, but let's just talk about something that everybody kind of sees on a day-to-day basis. We still believe that there's significant room for that number to run up. In fact, we see that number going up significantly over the next, I would say, 12 to 18 months. And how fast is that going to happen? I don't know. But as you see that happening, we may have other potential business opportunities that we can take advantage of. And as you have that plant already in operation, then you can take advantage even faster. So we would tend to think that those potential options for growth will be easier as the price goes down and as we are in operation in these plants.
Thank you. We got our first question in the chat here from Rock. What is your projected profit margin per ton depending upon which concentrate you produce? So
on the second client, because of the fact that we were able to negotiate what I would say a beneficial percentage of a sharing profit off the top, we would tend to think at today's prices on 15,000. I would say that our net after OPEX would be about $7,000 to $8,000 per ton. So you're looking at, if we're producing, let's say, just as a round number to calculate easy, if you're producing 300 tons and your net is 7,000, that's about 2.1 million on a yearly basis on a full run rate basis. Now, price will go up and down. Some costs may not be as we intended to be. So cost potentially could go up, but it could go down. There's certain things that we're working on to stabilize that cost structure. So, anywhere between 1.5, 2.2 million, that's where we should be if we're producing 300 tons per annum and the price is $15,000. So just to give you an idea on this project, and the capital for us to put that in there is in around the 1.5 million US. So, when you look at that, we'll be paying for our plant, a full capital plant, in less than a year, theoretically, right? So that's the type of business we want to go into. There are some risk associated with this, with these type of deals. I mean, of course, we're now on a more, I would say, on terms of the value chain risk, we're extracting the lithium from a solution. That's a potential risk, of course, and the cost structure with that. Then we're shipping that product to our plant. So there's logistic issues and potential risk there. And then we're producing lithium carbonate at our plant. There's some logistic issues and potential risks there as well. And then we'll be selling that to the market. So, it's a more holistic kind of risk assessment that we need to do, but the benefits are greater than just extracting the lithium, producing a lithium chloride solution and selling it to a client at their site. We're not making as much margin as we potentially could, and we're not recovering as much as we could potentially. But at the end of the day, we don't need to spend money on shipping. We don't need to spend money on sales and marketing efforts. So, all these things need to be taken into account. And that's why when people ask me, what is a combined margin that you see going forward? I say, well, every client is different. Every product that we're potentially making for our client will be different in terms of costs and the specs of that product. So you can't really take one client and then extrapolate that to the next 4 or 5 clients. You kind of more or less have to look at it on a holistic basis. So, but suffice to say, we believe that this client will provide a significant return, and we intend to take advantage of as soon as and as fast as we can, so we're able to operate, this year and make some money this year.
And with the second client, it's via truck you're transporting, correct? So is it contractors you're hiring, or do you have your own fleet, or how do you
No, yeah, it's a contract, and that depends on some of the logistics analysis we're doing. It could be done by rail as well, but at that level of 200 or 300 tons, we'll need to analyze that. But usually you can ship these things, and depends when we produce and how much we produce, how cyclical this is in terms of yearly, and we could potentially have some inventory and then ship a larger batch to the plant. So these are the things that we're now debating in terms of how often we ship, when do we ship, and the costs associated with that. But it will be subcontracted out for sure. We're not going to have a fleet for now there. It gets to a point where if you're producing a lot more than 200 to 300 tons, you would think that building a lithium carbonate plant close to your client would be the right way to go. At 200 to 300 tons per annum, that's not necessary. It is better to ship it to Georgia. But if you get to the 1,000-ton range plus, that's when you start thinking, okay, when does it make sense to go through the engineering and the construction and all that, the permitting of the plant, a lithium carbonate plant, closer to the client. And those are things that we're looking at other potential clients that we're working with now, but not necessarily for this specific client.
So with potential clients, it's essentially they have to have the scale if they're out of the state, right?
Yeah, I mean, you would not build a 200 to 300 ton per annum lithium carbonate plant anywhere, just for that specific client. So that's why we're shipping it to Georgia. We have already a permitted plant. It will cost us a little bit of money to ship a lithium chloride solution there, but it's much cheaper than to build a 2,000 ton facility or whatever it is near to the client site. Is that going to potentially happen? Are we expanding beyond Georgia at some point? 100% yes, if we get more clients. And if we get that, I would say, mass feedstock in a certain region that we can then ship to that region. And then we'll leave Georgia for let's say the eastern side, and then we have a central and a west potentially. Who knows how that's going to evolve, but that's the way we're looking at it. Yes.
Right. For anyone just coming in, we are answering questions in the chat, and we are getting a few coming in now, but just wanted to remind people if they just are tuning in now. We have another question here. What are the lengths of the contracts? 5-year ?
Well, this specific client is essentially unlimited until they continue to have product that we can process. But usually, these types of contracts are anywhere between 5 and 10 years. Our first client is around 10 years with a extension of 10 years going forward. But as you know, some of these clients can potentially have different types of, as they get better in what they're doing, sometimes their grade of the lithium within their content of their waste material could go down. There could be other impurities that are coming in. So these are the things we usually analyze to see if it continues to be, I would say, profitable for us to I would say, process that. But we haven't seen any changes. They haven't had any changes. We've tested things over the last year and a half, and in some instances without any changes. So we envision these contracts could be, let's say, 5 years plus. First client's about 10 years. This client is indefinite, but usually we have like a 5-year period, and then from there we can continue on depending on how the grade is looking when we start processing. As grade goes down or other impurities go up, then things start getting a lot more expensive to process. So we will analyze that after 5 years.
We have a question in the chat regarding expanding your plant and when is the right time? Is it after these contracts, or does it make sense to do it right now? But I'll read the question verbatim here. If the current plant reaches max capacity, how quickly could you find and build the next plant? Do you already have something prepared for a possible expansion?
Yeah, we already thought through that. Our plant in Georgia can be expanded in 3 to 6 months. And we know these clients are coming, right? So we're already negotiating some of these clients, and we understand how much is coming and when over the next, let's say, 12 to 18 months. So we could, if for example, let's say we get our third client, and the initial view is that we'll process a certain part of that client in Georgia until it gets to a certain capacity. Then we will expand Georgia accordingly, if that's going to be the case, and or start the building process near the client if it's big enough. But to answer the question specifically, how fast could we expand the plant in Georgia? 3 to 6 months, we can go from 2 to 5,000 easily. And with more capital, we go to 2 to 10,000 tons in 6 months. So it's not a question really of timing, because we would know that we come. It's more a question of capital constraints. So in terms of, how, if we had unlimited capital, can we put 10,000 tons? Yeah, we could. Do we have the money today to do 10,000 ton facility at our plant today? No, the answer would be no. So, we want to make sure that we're doing it correctly and not overbuild and put the capital where, it's not needed. I'd rather develop other clients and potentially have a higher OPEX because I need to ship than not have enough capital to do any more clients because we overbuilt a plant to have 10,000, but we can't do the extraction and the processing side of things because we already put the money aside into a lithium carbonate plant. So that's the way I think about it. At least the team thinks about it. But it doesn't take much. It doesn't take long to build. We already have all the permits in place in Georgia. Now, to build a plant in another state, in another region, it's region dependent. It's permit dependent, so that could take a year to do. So those are things that need to be thought a little bit more with more time, and we will do that accordingly as we see larger clients coming into the fold.
3 to 6 months is very fast. So all the parts and stuff is within America. There's no, or do you have to? Okay. Interesting.
Yeah, all the equipment is here. There's some long lead time items. Like, for example, a dryer could take you 6 months to get, and things to that nature. But the filter press and all those things we could get, in 3 months or less. And these are things that are out there and that can be done. We have our CEO has built these 4 or 5 of them, including ours, in the U.S. So he knows exactly who to call, when to call, and the timing from it. I mean, we have seen some of the long lead time items come down significantly over the last 12 months after the COVID situation. So we don't see that happening anytime soon. So hopefully that continues to be the case. So we don't see a significant amount of time that we could expand on a lithium carbonate plant.
Thank you. We got one more question here. Do you have a specific strategy how to find and reach out to additional clients?
Really, there's no specific strategy. We know the industries that could have I guess that's specific, but we know the industries that could have lithium in their waste. So we have continued to have discussions with those, and some industries that would have kind of like what we call a byproduct lithium, that a lithium product or a lithium bearing liquid and or brine that is not being treated, that we can go in and extract the lithium and produce a lithium carbonate product or a lithium compound that can be sold to the market. So that's a specific strategy that we're doing there. But in addition to that, even though this is a recycling, what we call in the midstream feedstock recycling industry, we do have other specific strategies to apply the same processing on what we call the lithium refinery business. And that is more geared towards I would say, the upstream assets, the mining assets, some of these mining assets, for example, in the petrobrine industry, where you're extracting lithium and lithium compounds from the oiled fields, and there are different ones in Canada and the US. And some of these companies do not have the processing capability to extract the lithium from solution. We believe we can, but these are much larger projects. These are much larger, I would say, development, lab, piloting projects. So those are the strategies that we're kind of looking after. What we want to focus on, I want to make sure people understand, is that we call these, and not necessarily, for lack of a better word, we call them low-hanging fruit projects. They're smaller in nature. Yeah, they're 200, 300, maybe 500 tons. Maybe, the biggest one would be anywhere between 1,000 and 2,000 tons. For a lot of people, these are too small. But like I just showed you, a 200 to 300 ton project can generate for you a couple $1,000,000 a year. I mean, if you have 3 or 4 of these, now you're talking, and these are low lithium prices with very low capital intensity. So if you can generate 2, 3, 4, 5 of these, and you're not all of a sudden in the 2,000 to 5,000 ton per year range, you're generating a significant amount of EBITDA and cash flow that then stabilizes the business, and then that funds the larger ones. And now you have a significant amount of, I would say, experience, exposure. More projects will come in. So I believe that's the specific strategy that we're essentially working on. Smaller projects. Make sure they work and work well, generate cash from those projects, have a stable business that can pay the bills, and then bet on the larger ones after you're stable, after you've demonstrated that these things work. Because a lot of the other companies that we could potentially be compared with, they're looking at 30, 40,000 ton production facilities with billions of dollars of capital. That's not financeable in this industry. It's just simply not. I mean, and it is not even proven. So you're gonna go from 0 production to 40,000. I mean, it's very, very difficult to, I would say, sell that story to the market and finance a $1 billion, $2 billion project in, I don't know, in Argentina or something like that. It's just very difficult to do. So we're doing our specific strategy to build smaller niche plants, and then from there expand from even brownfield with those clients, and or then apply that same technology to larger deals, but with a stable foothold, a stable base of business that can lead us to that next level. So that's a bit of a long-winded explanation, but that's the way we're trying to build our recycling business into that refinery side of things.
No, it's worth the exercise of sharing the vision here. We have another question. An individual just came in a little late, wondering if you could touch again on the expected revenue from the first client.
Oh, how the first revenue is built?
In regards to timing.
For the first client?
Yes.
Okay, yes, sorry. So recall we signed the same term sheet that we announced today. We announced this term sheet with our client June of last year, if I remember correctly. It has taken us a while to do it. Remember, first client is always the hardest. And we've now, most likely, will be signing some binding terms very shortly. I mean, we've been saying this for a while, but pricing has not helped. Lithium pricing has not helped. Recall when we started negotiating with this client more than a year ago, initial negotiations before signing the term sheet. This client, they were paying, I believe, anywhere between 40 and 60,000. Let's say 50,000 per ton of lithium carbonate equivalent. Okay, 50,000. Today they're paying, let's say, 15,000, right, approximately, or a bit less than that. So when you're at 50, you want to do things very fast, and everything's yesterday. When you're at 15, you're like, well, it's tomorrow, next week, next month. So things have gone slow, not necessarily because of us, but also because of our client. And we both had a little bit of delays here and there, but we're very close. Theoretically, if we were to sign some binding terms, let's say over the next few weeks, let's say in the month of April, then we would test what we would call this would be commercial qualification tests. Now, before you installed a plant, a commercial style plant, you have to qualify that commercial plant before they turn it on, right? Because this is a very sophisticated chemical company that will not turn things on for you until you demonstrate that your plant can commercially is qualified to use the feed. So what we're doing now is testing what they call I would say one carousel, let's say one carousel. And we're doing that over the next few weeks. In fact, we just received the brine, or we're going to receive the brine this week or early next week for the first carousel. But their plant has 8 carousels. So once we produce one carousel, we ship it to them. They test one carousel. And then we're going to do 8 carousels. One carousel is 2,000 gallons of lithium chloride. 8 is 16,000 gallons of lithium chloride. Once we have done both, which will be done over the next month, that's it. That's the qualification. And then we installed our plant, and then we're up and running. So, again, we should have been potentially operating by early this year. That's what we wanted, early Q1 of this year. We're now obviously in Q2. So we believe we'll be generating revenue from this client in Q2 of this year. So, over the next couple months, 2 or 3 months, I would say before June, let's say in May or in and around that time frame, we'll be operating our plant from client number 1. Could we have done it sooner if price would be higher? I think 100% that would have been the case, but such is life. So we just keep moving forward, but definitely client number 1. In fact, we just had discussions with client number 1 yesterday. So we're definitely very focused on making that one work, and it should be done in Q2, end of Q2 of this year. So, that's a long-winded story or answer to that question.
No, appreciate it. Okay, we have a question regarding the price. What is your outlook mid to long term?
Oh, that's I guess the $1 million question. So my view, and that's my personal view, taking into account what I've seen in my experience in lithium. Recall, I was the CFO of Neo Lithium, from 2015, 2016 to 2022 when we sold it. We saw about 2 or 3 cycles there. When we started there, the price was, maybe 5,000, 6,000. The highest it ever got within that price maybe was 15 to 18,000. Then it went down to 10 and went up. So, and it goes up very quickly. The last time it went up, I remember, I think it was SQM was selling lithium carbonate, technical grade, I believe, for about $5,000 a ton at one point. And that was in 2021 or early 2021 or 2020. From there to $80,000 a ton, almost 100 spot market, it took less than a year. Now, I'm not saying that's going to happen again, but this is like a 10 to 20-fold increase in price for a specific client. We've seen price have stabilized. It went down to the minimum of about $12,000 a ton of lithium carbonate over the last 2 or 3 months past. It has stabilized and gone up. In fact, some of the spot pricing is in the $15,000 range. We do believe that over the next 12 months, the price is going to go anywhere between, this is our own opinion, internal, between 15 and 20,000. And my kind of mid to long-term price for lithium carbonate, it will be around 30,000. Some say 25, some say 35, some, 30,000 would be a price that would make other mines become profitable and be able to recoup their capex and have a IRR, or return on investment, that is double digits. If you don't have $30,000 a ton, the majority of the new mines that are coming up will simply not have returns in the double digits or mid double digits, which is what is needed. You will never build a $1 billion, $2 billion mine that has a single digit return or low double digits. Just people will not do that, because you're going to see that the risk associated with that would not make any sense. So, but when you have 30,000 ish or more, then that's when you're going to see some investment, significant investment coming in. And you're seeing a lot of outside investors, larger people getting involved. You're seeing large oil and gas companies getting involved, large, I would say, chemical companies starting to get involved. So as you see these guys with significant amount of money coming in that have a lot of muscle and power and capital, you're going to see those guys put a lot of that money into I would say, real projects that will not let them go. So they won't fold, and they will build these projects. So I would say 15 to 20 over the next 12 months. That's my view. And then from there, 12 months, if not sooner, because things can go change quite quickly, you will tend to go into the 30s, if not higher. So, you're going to see significant potential here. And all the numbers I've given through this conversation are just assuming 15. I'm not assuming 20. I'm not assuming 30. I'm just assuming 15, the low end of the range.
Excellent. Thank you, Carlos. In regards to questions, I think that's it for today. For anyone that came in late, just know that this is being recorded and will be available on YouTube. I'll pass it back to you, Carlos, for final commentary, but there was a positive statement rather than a question in the chat, just saying that perhaps your team is focused internally on Q1, but he's saying that given the parameters of the market, you're actually well within the parameters of a typical startup. So I don't know.
Well, look, we have high standards for what we're trying to do. And it's sometimes when you put a date and you say something publicly, you want to keep that date as the date you want to produce. And we said that we want to do Q1 of this year. Now, granted, we went public June of last year. Okay, so we haven't even had our first year anniversary of being public. We're not even 2 years into the private/public inception of the company. We announced our first client, let's say, a year ago. And yes, these are typical delays, but we don't like delays. But we can't control I would say, the macro environment. Really, we just control our internal side. So there are capital constraints that we have that make us go faster or slower in certain things. There are some technical constraints that we may have from time to time, but the macro constraints are something that we don't really control, and sometimes they take the front page when we want to push something faster. So I guess to close is that we're doing our very best to get all these projects onto production and make revenue and potential cash flow as soon as possible. We believe we can. We believe we have the people to do that. And there's going to be some really good news over the next few months. So hopefully, that translates into a better share price and to better results for everybody. So that's I guess the last comment that I wanted to have.
Well, thank you, Carlos, and appreciate the updates, and for everyone that submitted questions and making this an engaging conversation. But thank you, everyone, especially you, Carlos, and enjoy the rest of your day.
Thank you, everybody.